I'm Pablo Casalimas, and you are watching the 161 Report, streaming to you live from Bamboo Strategic Media. The 161 Report is a platform bringing you virtual events with guest speakers, live interviews, and a platform to help our local businesses weather the storm during these tough times caused by COVID-19. So we've had 2 episodes already, and thank you everybody for tuning into those. We had an amazing engagement. We're very excited for our episode 3. We've got actually 2 speakers for you today, and we're gonna get started with the first one. His name is Salazar from Lendio North Florida. Lendio is the largest small business lending platform in the country, and over the past 6 years, they've serviced around $2 billion in loans, and now their demand is skyrocketing. Over the past week, they've been getting almost $2 billion of demand per day. This is insane. So we're very excited to be talking with Louis today. Let's bring him on, and we're very excited to have you, Louis.
Hey Pablo, how are you?
Hey, how's it going, Louis? So before we get into it, can you talk briefly about how you got started with Lendio and how your journey brought you to where you are today?
So I was previously working, I lived in Virginia, in Charlottesville, Virginia. And I was working actually for the city of Charlottesville. I was actually a compliance auditor there, tax compliance. I worked with hundreds of businesses. I was helping the city of Charlottesville essentially recover unassessed tax revenue. I dealt with a lot of businesses, and I felt like that experience really prepared me for what I am doing now, because at the time I was dealing with business owners that were having trouble paying their taxes to the city. And it was always an issue of access to capital. That was really kind of they didn't qualify for whatever reason. And because their business was seasonal. And so they just had lack of access to capital. My wife received an offer to come here to Gainesville, and that's how I ended up here. But I didn't want to work for the government anymore, so I decided I kind of got the entrepreneurial spirit, and I found Lendio, and I felt that it was going to be a good fit for not only the background that I had, but also the mission of helping the Main Street business owner get access to much needed capital. So that's why I decided to join the team.
Absolutely. So walk us through a little bit how the craziness has been going for Lendio. How have you guys been managing all of that? How are you guys keeping up with all the influx of loan applications?
Yeah, it's been very chaotic, but Lendio has been able to step up to the plate in terms of offering the technology, and we've been hiring. I know Lendio has hired roughly 200 to 250 new agents to service all the customers, to service the demand for this money. And at the local level, we have about 50 Lendio franchise owners that service their local markets, and they've also staffed up to be able to take in on handle the demand at the local level. And it's been tremendous. We've been handling about anywhere from 1,100 to 1,500 applications an hour, processing through the whole Lendio channel, which is a tremendous amount.
That's insane. Can you tell us a little bit more, share a couple of more statistics with us about Lendio and some of the loans that they've been giving out? I know you mentioned that just last weekend you guys received about $3 billion in loan applications. And what are you doing personally in order to be able to process all these applications?
Yeah, that's a good question. Right now we're on day 6. Yeah, day 6 of this whole since it started last Friday. We've been averaging a demand of about $2 billion per day, meaning we've been taking that much in application and loan amounts. And At the local level, I've staffed up. I have currently 7 agents that I have working with me, and we're working a lot of um, the local demand, right, in the state of Florida, our local community, um, and it's just the business owners that have not been able to get serviced. In their communities, we're that solution for them, that for the ones that haven't been able to find a bank that's been able to service them. We definitely encourage all business owners to go to their local bank, to go to their credit union, um, because that they have the relationship, and if they're SBA certified, then they should go with their local bank. However, as a lot of us know, a lot of our local banks, may not be able to take those applications. It is an overwhelming amount, and it's just a lot of times the banks, they're just not ready. This whole thing just rolled out way too quick. I mean, it just they basically rolled out all of the guidance the night before they expected the banks to basically start taking applications. And then it was like, here are your guidelines, go. And I mean, that just creates a huge level of uncertainty, and there's no training. I mean, it's chaotic. I mean, it was rolled out very poorly. But at the same time, the whole reason is you need to get this money out as quickly as possible. And so it's just the nature of the beast. It has to, it's going to be messy. It's going to be chaotic. But the most important thing is the mission is to get the money in the hands of the Americans, the workforce of America that need it. So.
Absolutely. And those who are tuning in right now, we're going to be taking a Q&A at the end of the session. So make sure you put your questions in the comments below. So Louis, can you tell us a little bit about why are these banks turning down some of their longtime customers? And tell us a little bit about some of the people that are kind of getting the short end of the stick. Some people who are not able to benefit or not being able to take advantage of the stimulus package because of their banks.
Yeah, it's another great question. I couldn't answer for every individual bank. What people need to understand is that, the banks have, they have their limits. They're a lot of times their hands are tied with regulations or caps of how much they can grow in a certain time. The other uncertainty is that the federal government doesn't always provide the commitment of how soon they will replenish the bank's balance sheet. So you have a situation where you have banks, local banks, where they need to get this money out, and they should, but then they don't have the security from the federal government of how soon they're going to get that money in return. Because one thing to be clear is that the money initially is being covered by the banks, right? And then the federal government is depleting the banks, reimbursing them. That creates uncertainty, and it creates a level of risk for the bank. And so some banks can manage that risk. They may decide or allocate a certain amount for funding of these loans, but once they get more guidance and more security of when they're going to get the money back, they may have themselves more confidence to let the money go out. There's something that people need to understand is not a lot of deposits are going into the banks right now, but the federal government is also expecting them to, lend all this money. It puts them at a high risk. So although we want to blame our banks, I think, it's just a tremendous situation. And we haven't had the guidance from that's been needed. And the banks, Lendio, and everybody, we're just in the middle of it, and we just have to, hold on, and everybody is doing the best they can. I really believe that. I feel the federal government is doing the best they can. I think the banks are doing the best that they can. Lendio is doing the best that they can, and America is trying to hold on as best as they can. And we just gotta, we gotta understand we're in this together, and just, be patient. I know it's difficult.
Absolutely. So we've got about 7 more minutes here with questions with Louis, and then we're going to take a live Q&A from our audience. So don't forget to put your questions in the comments below. So Louis, I understand that some more rural areas, the businesses are struggling quite a bit to get these loan applications in because they've only got a limited number of banks, and those banks are, over capacity right now. Can you talk a little bit more about the situation that's happening?
Yeah, correct. That's, we've been hearing that through our channel, and also just seen a few articles online, and it's concerning because it's almost a hidden crisis within the crisis. Rural America is at high risk because usually in small communities there's a limited amount of financial institutions or banks. Sometimes they may just have 1 or 2 banks that can, sustain some loans, but not everybody getting a loan, right? And so you have banks in rural areas, or a limited amount of banks. And so you have business owners in rural areas that don't have any other option. They're just limited. And so Lendio, being a marketplace, we can provide, that hope of getting them money, because Lendio will fight and will get them their application processed and through the system and to a bank as quickly as we can. Once it gets to the bank, we push the bank and SBA to shove those applications through their systems to get the money to the customer, but we're also at that point we're out of the picture. That's out of our control. But we try to work with the SBA and the banks to try to facilitate that as best we can.
And Louis, so what do you have to say for some of our audience members who are listening right now and they're thinking, do I qualify for the PPP loan? Maybe we have a lot of small business owners that work as contractors, and maybe they don't have good credit, or maybe they don't have a lot of cash flow, or maybe they have no employees. What do you have to say for people who don't think they qualify for this loan?
Right. So the PPP program right now, which is the Paycheck Protection Program, is designed for all business owners. And even the business owner, even if you're an independent contractor where you get a 1099, you're considered essentially a business owner. You're in business for yourself. But this program is for every business owner. There are no restrictions of credit or how much revenue your business makes. The whole idea and premise of this program is to get money in the hands of working Americans to help our country get back to work and give us some funds to be able to give the business funds to be able to cover the payroll of their workforce. So every business qualifies, and whether that's a 1099 independent contractor, whether that's a sole proprietor, anybody that has any service, qualifies. There are a few exceptions with gambling and strip clubs and those types of businesses, but pretty much every other business out there qualifies.
All right. Can you talk a little bit about what the application process is like, how lengthy it is, and how can some of our viewers listening right now, how can they apply through Lendio?
The application is actually, it's the thinnest application you could ever think of to apply for, essentially free money. You essentially fill out, it's like a couple pages. You enter in some information about your business, about your employees, your average monthly payroll, times 2.5, and that's essentially the amount that you qualify for your loan. And then you provide some documentation to support payroll, to support if you're an independent contractor, to support what you get as a independent contractor, or if you're self-employed and you need to provide Schedule C's and things like that. So it's really just the documentation to support how you're paying your employees and how you're paying yourself. And then just an ID verification. So just providing, a piece of government ID. And if people are interested, if people have gone to their bank, we encourage you to go to your bank. If you have not been able to get service at your bank, then we can certainly help with the process. And you can go to our website. Our local website is lendiolocal.com/North Florida, all one word. So lendiolocal.com/North Florida.
Perfect. So we're going to get into questions. I've got just one more question for you, Louis, and then we're going to take the live Q&A from our audience. Make sure you guys are putting your questions in the comments below. So Louis, I understand that you guys are getting such an influx, such a high volume of applications. What are you personally doing now to be able to manage that, to process all of these applications? How are you personally keeping up with this?
Not sleeping much. So right now, I'm probably averaging about 3 to 4 hours of sleep a day, and working. I have a team of about 7 people right now that are helping me service all of the customers that are coming through our system, and just working really hard. I'm a small business owner myself, so I'm in the fight with our local business owners. I am wearing the same shoes you are. I understand exactly the pain, and it's difficult. It's hard to, and that's why I feel for you guys. I feel for our community. I feel for everybody in the United States that is going through the tough time that we are, and my wife has actually been dragging me to bed because I can't get off my screen, because I feel like I have to just do 5 more applications. I gotta process another 10 applications. I need I'm committed. And the whole company Lendio, right now we're working 24/7. Shifts at corporate, the franchisees, to just get these applications processed and getting them to the banks. So.
Absolutely. So, all right, we're getting to our questions from the audience in a second. First off, we want to thank our sponsors. So Bamboo Strategic Media, thank you so much for making this possible. Lendio North Florida, really appreciate you, and Rutex. Our first question from the audience is, it doesn't make sense for me to go to a bank first or to Lendio first, since a lot of the banks are already at capacity on their loan applications.
Yeah, that's a good question, and I think you should always go. You check with your banker, call your banker, ask them, hey, if I go to you guys, are you able to process my application? And if they can, then certainly they should. If they're not, we're here. We're here to help. So I encourage all business owners to go to their local bank and apply. This is something that we're in it together, and it's not about who does it, and no, it's about who can. It's not so.
Absolutely. So we're having issues seeing some of the questions. Oh, here we go. So what terms are required in order for the loans to be forgiven?
That's also a great question. The short answer is you need to use the money for what it's intended for, which is to pay your employees. And you can cover interest, like mortgage interest, and cover some other expenses, like high interest on some loans. But the premise and the sole purpose of this money is to be able to hire your staff back and putting them back to work. If you're not using the money for that, then it's probably not going to be forgiven.
Absolutely. So we've got about 6 minutes left here with Lewis before we move on to to Dr. Morris, who's coming up next. So our next question from our audience, Lewis, is there a specific percent of employees you need to retain in order for these loans to be forgiven?
That's a great question. I honestly don't know the exact percentage, but I believe they're giving you essentially 8 weeks of pay so that you hire all of your staff back. I don't think you could just pick and choose who you're hiring back. You gotta hire everybody. Use it to hire everybody.
Okay, understood. The next question from our audience is there a personal guarantor required in order for them to apply for these loans?
The personal guarantee, no, there's no personal guarantee. So these loans are going to be I mean, it would be like any other SBA loan, because it is an SBA product. So
yeah, absolutely. The next question we have is, does credit play a factor in whether somebody gets accepted or whether they actually get the loan or not?
No, credit is not a factor. So yeah, these are not credit-driven loans. So if you have the worst credit or the best credit, you still qualify, and you're still going to get the amount that you qualify for.
Right, that makes sense. The next question that we have is there a capacity or a limit to how much these loans can give to these businesses? And is there a minimum amount?
Is there a minimum loan amount?
Yeah, minimum or
No.
maximum?
So the maximums, that's a good question. Honestly, Pablo, right now I don't have that information. I don't. But there is no minimum. Every business does have a cap. For example, you can't have an employee. So if you have an employee that's making more than 100,000, you can't claim income. So, if you had somebody like making 300,000 in your company, you would essentially they would get capped at 100,000. So you couldn't claim more than 100,000 per employee.
Yeah, that makes sense, Lewis. So we're going to start wrapping this section up. Lewis, is there any last-minute thoughts or anything that you want to leave our listeners with? We've got about 2-3 minutes left in case you wanted to make any last-minute remarks.
Yeah, I would certainly, tell. I want to encourage everybody to, we need to hang on, and we need to be patient. Everybody's working nonstop to make this work, and the government, I know, wants to get the money out. The banks want to lend, and we want to make the process as easy as possible. Are people going to be upset? Yes. Are things going to go wrong? Absolutely. Are expectations high? You better believe it. But it's something, it's uncertain. Every day we get new guidance. There's new changes just about every hour, every day. and we just have to roll with the punches and just drive on. And I think that's the same attitude that I think we should all take, is just, hey, let's keep our head up, just drive on, and we're in it together, and we're going to figure it out. We'll get through it.
Thank you so much, Louis, for being with us today. We're going to take a quick commercial break, and then we're going to get to our next speaker, Dr. Michael Morris. Thank you so much for being with us, Louis.
Thanks, Bob.
Welcome back. Up next, we've got Dr. Michael Morris. He's been studying and working closely with entrepreneurs for 40 years now. He's published 13 books and over 130 peer-reviewed academic articles. So we're very fortunate to be here with Dr. Michael Morris today. He's going to talk about some of the myths and misconceptions about new venture creation. And he's got a new book that just came out that we're really excited to talk about. Dr. Morris, thank you so much for being with us today.
Well, it's great to be here, Pablo. Thanks for having me.
So why don't you start off by telling us what got you into studying entrepreneurs and entrepreneurship?
Yeah, many years ago when I was studying, I was always a little frustrated because the most important element in the economy, the dynamic that makes the economy run, is entrepreneurs and entrepreneurship. And yet, economists at the time largely ignored the entrepreneur. Business schools were preoccupied with big business and the Fortune 500. And yet, the piece of the puzzle that most explains job creation, most explains innovation, most explains economic growth are entrepreneurs. And so that's part of it. The other part is I fundamentally believe that entrepreneurship is about empowerment. It allows people to take control of their lives. It allows people to change their families, their communities. My work today at Notre Dame is focused heavily on people in poverty. And we look at all the solutions for poverty and we spend $1 trillion a year on it. Poverty rates haven't changed since 1964. And yet we don't talk about things like entrepreneurship as the pathway out of poverty. And so whether it's the poor, whether it's disabled veterans, whether it's lots of segments in society, entrepreneurship is an amazing pathway to self-empowerment, but also to contributing to society and to your community. So that's what inspires me.
Yeah, that's a great point. So Dr. Morris, can you tell us about your newest book that just came out? It's called What Do Entrepreneurs Create? Can you tell us a little bit about what you cover in that book?
Sure. So our new book addresses one of the most basic questions. What do entrepreneurs create? And the reality is, if we look at economic development experts and politicians and local entrepreneurial ecosystems, everybody is enamored with the idea of creating the next Uber, creating the next Facebook, creating the next SpaceX. And what we fail to understand is those high, extremely rapid growth businesses that scale and that attract venture capital and that ultimately have initial public offerings and make everybody lots and lots of money, those ventures are less than 1% of startups. So there's another 99% that is mainstream entrepreneurship in terms of the vast majority of entrepreneurial activity in society. And so the book systematically looks at 4 different kinds of ventures that entrepreneurs create. So we distinguish between what we call survival ventures, lifestyle ventures, managed growth ventures, and aggressive growth ventures. The survival ventures are, the person that's got a corner hot dog stand, the person that comes to your house and is a handyman and does odd jobs, the person that is at a public market. They're making enough to pay this week's bills. It's a hand-to-mouth kind of existence. But there are a lot of these survival entrepreneurs. Lifestyle ventures are the local hardware store, the local bar, the place you get your hair cut, the place you get your shoes repaired or your car fixed. They are not home-based typically, some are, but they're doing more than just getting by. It's not just hand-to-mouth. Nobody's getting rich. There are no any millionaires being produced, but they establish premises, they hire employees, they pay taxes, they're embedded deeply in their local communities, and so they're a second piece. The managed growth firm is the it's the person that starts a real estate agency and 15 years later they've got 20 locations throughout, say, North Florida. It's consistent new locations, new markets, new products, but at a steady, managed pace. And then the aggressive growth ventures are the gazelles, the 1% that take off. And so if we look at these 4, about roughly 85% of startups are survival and lifestyle businesses. Only 15% are managed growth and aggressive growth, and less than 1% are aggressive growth. So there are a lot of lessons there. One is most small businesses start small and stay small, and that's okay. They still make a critical contribution to society. The ones that do grow we can distinguish between managed and aggressive growth. And so the book lays out these 4 and explains the differences between them. And the differences are profound. And it gets to a key question, Pablo, and that is a lot of entrepreneurs, when they're starting something, they're enamored with the idea, but they don't have a clear sense of, what am I really trying to build? Is this going to be a lifestyle venture? Is this going to be a managed growth venture? Am I really trying to create the kind of explosive growth of an Uber? And too many of the presentations and the teaching in entrepreneurship and the books and so forth, they sort of gravitate towards some common denominator when these things are as different as night and day.
So for our viewers listening right now, we're going to be taking some questions, live Q&A from our audience. So make sure you put your questions in the comments below, and we will give those questions to Dr. Morris. So Dr. Morris, what are some of the practical implications of the different types of ventures that you covered in your book?
Okay. So, Pablo, a big implication is when I describe these 4 to you, survival, lifestyle, managed growth, aggressive growth, you probably assume, well, it's a continuum where the survivalist becomes a lifestyle venture eventually, and the lifestyle venture becomes a managed growth venture eventually. And that happens, but it's the rarity. The tendency is, if you start a lifestyle business, it tends to remain a lifestyle business. If you create managed growth, then growth is part of your DNA, but it's steady, stable, managed growth. And so it's hard to shift directions because if you start to think about resource requirements, skill requirements, where they get their funding from, the kind of people they hire, the way they deal with cash flow, the time outlook, the exit strategies they employ, they're substantively different between each of these four types. And so having a sense of what I'm trying to build or what I'm trying to grow is critical for making the right kind of decisions about what kind of assets I own, how I try to finance this thing, what are the skills in myself that I need to be working on and developing. And what we identify is about 15 different unique elements of each of these that really distinguish them from one another.
Interesting. Wow. So, Dr. Morris, can you tell us a little bit about some of the myths and misconceptions? Now we're getting to the topic that we had for this session. Some of the myths and misconceptions about entrepreneurship, about new venture creation.
Sure. Well, the issue in these four types that we talk about in the book actually give rise to some of the myths and misconceptions. The first point is, too often we look for commonalities. You know, what does the prototype of the entrepreneur look like? Well, they have this and this and this characteristic. I think that is a total waste of time, because the reality is entrepreneurs tend to be more different from one another than have a lot of shared characteristics. And if we think about the survival entrepreneur versus the lifestyle entrepreneur versus the managed growth entrepreneur, they look different from one another. Another, real important myth is we have this business plans are important. So not just to Lendio or to a bank. Business plans are important because they impose a discipline on the thinking of the entrepreneur. But we have this business plan mentality that's wrong, which basically says, write out your business plan, execute your business plan, make money. The reality is, almost always what you create, Pablo, looks very different than what you set out to create. The venture that succeeds, that navigates all the obstacles and all the setbacks and all the unexpected things, like the shutdown of our economy during this coronavirus, all the things that happen on the entrepreneurial journey are such that the changes you have to make, the adaptation you have to engage in, the going back to the drawing board and reinventing your product mix, your target audience, your pricing approach, or whatever, the learning on the fly that you have to do, what you create will look different almost always than what you set out to create. What succeeds looks different than what was intended. And there are a number of others, but one more I want to stress because I find it a little frustrating. I walk into these meetings all the time, speakers and so forth, and I get up there, Pablo, and I go, well, 98% of new ventures fail. And that's just outrageously ridiculous. There is zero evidence that failure rates in entrepreneurship are that great. What we do know from hard evidence is that roughly between 45 and 55% of new ventures fail in the first 5 years or don't get through the first 5 years. Well, that's still a meaningfully high failure rate, half, but it's a heck of a lot lower than 98%. It suggests not only much more likelihood that if you can learn and adapt and persevere and that you can succeed, but the other part of that is we always fail to distinguish that these failure rates differ a lot by industry. Failure rates in the restaurant industry, yeah, they're a little higher. Failure rates if you're in molded plastics, probably quite a bit lower. If you're making computer chips, probably even lower than that. And so the reality is we misrepresent entrepreneurship when we talk. I mean, failure is part of the game. You're failing every day. You're failing all the time, but you're failing to succeed. And so I think that's an important myth as well.
Right. So we've got about 10 more minutes with Dr. Morris before we get to the live Q&A. Make sure you guys leave your questions in the comments below, and we'll make sure we get those to Dr. Morris. So in the beginning of your answer, Dr. Morris, you mentioned something about the founders of these different types of ventures being different. What do you mean about they're different? Is it something about their personality or what the risks they're willing to take? What do you mean by that?
Well, I'm actually saying the opposite of what you just asked me, because when I say they're different, I'm saying they're different from each other. It's not that they're different from the rest of society. It's that the population of entrepreneurs, the natural tendency is we look for a prototype. They used to do these studies. What are the characteristics of a great leader? And that was a dead end kind of conversation, because leadership and great leadership tends to be situational. Well, so then they go, well, what are the traits of successful entrepreneurs? And they would come up with these laundry lists. Entrepreneurs are more tolerant of ambiguity. Entrepreneurs are calculated risk takers. Entrepreneurs have an internal locus of control. And there may be characteristics like that in general entrepreneurs are higher on than averages for society. But my point is a different one. It is, you give me any 10 entrepreneurs, even in the same industry, and we look carefully at them, we're going to find they're far more diverse. They look very different on all kinds of, not just psychological characteristics, but sociological or their life backgrounds, and so things like, well, if you're born into a family where your dad or mom is an entrepreneur, you're likely to be an entrepreneur. That's not necessarily true. So the message, the bottom line is, when we look at these prototypes, well, you got to have this, and this to be an entrepreneur. First, it's not true. There is no set of criteria that will predict you will be a successful entrepreneur. Second, entrepreneurs are, in fact, so diverse that they may well be more different from one another than similar. Third, there are probably different kinds of entrepreneurs. So it isn't a single sort of prototype. But the most important implication is, a lot of people go, well, do I have the right stuff to start a venture? And my point is, there isn't some checklist of the right stuff that anybody can start a business. Not anybody is Richard Branson, and not anybody's capable of building, the Virgin Empire of companies, but anyone can start a business. The issue is more, can I do it in a way that'll build a sustainable enterprise, it'll meet my objectives, and that will allow me to be sustainable.
Right. So we've got about 1 or 2 more questions here before we get into the live Q&A. So Dr. Morris, what are some of the most common mistakes that entrepreneurs make when they're starting out?
Yeah, it was very interesting. I really want to applaud the first speaker, Lewis, and because he's on the front lines in the middle of this hurricane of what's going on, and he's fighting the good battle and doing the things that our economy needs. But quite honestly, we always put money first, as if money is what it's all about. And money does matter, but I think a lot of entrepreneurs are so preoccupied with that, or people don't pursue entrepreneurship because they're so preoccupied with the financial resources necessary, that we lose sight of the fact that many, I would argue the large majority of successful entrepreneurs, regardless of whether it's a survival, lifestyle, managed growth, or regressive growth business, started often with less than $1,000 and built something impressive and something sustainable. And so it's more how we approach the whole resource picture and how we develop we talk a lot about the entrepreneurial mindset, but how do you apply the entrepreneurial mindset to how you leverage resources, how you engage in guerrilla skills, how you share and borrow? The mistake a lot, I see entrepreneurs all the time. I want to buy my building. You don't need to own a building. You need to lease a building. You don't need to hire everybody. You can also have contract employees and so forth. So the issue is to be much more enlightened in terms of how to get resources without spending a lot of money. And the other issue I think that's critical is entrepreneurs have to have thick skin. The whole nature of the entrepreneurial journey is you make a whole bunch of mistakes. You can't know the right price to charge, the right target audience to go after, the right promotional medium to use, or you learn on the fly. And if you have a fixed way of looking at it and thin skin, and you can't take the criticism, you'll never survive. But if you understand that what you're building is going to look very different, you have to adapt constantly, you have to experiment, try something, learn on the fly, and quickly adjust, then success is much more likely.
Absolutely. So you're a professor of entrepreneurship, and you've been researching entrepreneurship for 40 years. You've written books about it, you've published articles about it, and you've worked very closely with founders for a long time. But do you believe that entrepreneurship can really be taught?
Yeah, this is a question that comes up a lot. The answer is yes. Can I teach somebody to be an entrepreneur? I can certainly help them develop entrepreneurial competencies and entrepreneurial skills. I can obviously teach them a lot about business in terms of cash flow management or market segmentation or operational efficiencies and those kind of things. That isn't going to make them into an entrepreneur. So what I believe entrepreneurship education most needs to be about is not all the nuts and bolts and blocking and tackling of marketing and finance and bookkeeping. Those are important, obviously, but it's really about this entrepreneurial mindset, helping people understand that this is a journey. The entrepreneurial journey is an uneven, circuitous, chaotic, uncontrollable, and largely unpredictable journey. And so it's this mindset that leads to creative problem solving, leads to clever ways to use somebody else's resources instead of tying up what little money you have in resources. It's this mindset that is what we're most trying to develop when we educate future entrepreneurs.
Absolutely. So we're about to jump into the Q&A section of this segment. Thank you to our sponsors. We're really grateful for Bamboo Strategic Media, Lendio North Florida, and Rutex for making this possible. Make sure that you guys are leaving your questions in the comments below because we're about to have them on the screen and we are about to get to those. But right before we get to that, Dr. Morris, one last thing. What advice do you have for entrepreneurs that are just getting started or maybe haven't taken the leap yet?
Well, the number one advice I have is to do it, is to go for it. I think we it's a whole paralysis by analysis kind of thing. And especially now, it is in crisis times. It is when things are disrupted, when we tend to, like turtles, get into our shell, when in fact now is one of the best times to act on your entrepreneurial instincts. I think there's more opportunity, and a lot of the people that act in difficult times are often the ones who end up the most successful. I think it's important that we not look at entrepreneurship as a one-off thing. I think as you do entrepreneurial kinds of things, you find that this mindset is something you apply over and over again, and so being preoccupied with the one venture that's going to change the world. Well, the fact that you're going to hit walls, you're going to have setbacks, and where you succeed may be in a different place if that entrepreneurial mindset maintains itself. And I think the other thing, and I stressed this before, but don't be constrained by the resources you have. The reality is there are so many creative and clever and alternative ways to tap into resources. You don't need to buy a truck if you can borrow or use somebody else's truck. And that in fact, the successful entrepreneur develops a mindset of, even when they have the resources, of leveraging and using other people's resources. Those would probably be some of the key ones that I would suggest.
Yeah. So our first question from the audience is, it's something that you briefly just touched upon, actually. A lot of very successful entrepreneurs say that every crisis is a time of opportunity. And some of our viewers are wondering, how should they be thinking about these opportunities? What kind of questions should they be asking in order to take advantage of these opportunities during a crisis like the one we're facing right now?
Well, we have a concept that we talk about called the opportunity horizon, and that is the set of opportunities any one of us is able to see at a point in time. And the challenge for me is to help people expand that opportunity horizon, to see possibilities because our opportunity horizons are limited by the world we live in, the things around us, the experiences we have. And so, if I grow up in poverty and I grow up in the hood, the range of opportunities I'm able to see are limited by what I'm exposed to, the experiences I have, the network that and the kinds of role models and people I'm exposed to. And so, to me, the first thing is to put yourself into discomfort zones, try new things, experiment with, so you start to see greater possibilities. I think that's a key thing. Times like this are threatening. Well, there's a direct correlation between how threatening things are and how much opportunity is out there. It is. For every, if I look at the speaker you had before me, and he's talking about this avalanche of loan applications that are coming through. Well, one looks at that and goes, okay, how do I make money from that? And I'm not trying to say take advantage of what the government's trying to do to solve the whole employment issue, but I'm saying turbulence and change, the entrepreneurial person looks at that and goes, yes, but that creates some new need. There's a new pain out there that I can try to come up with a cool solution to address.
Absolutely. So we're going to get to our second question here. So real quick before we do that, so we've got about 5 minutes left. For those tuning in, you are watching the 161 Report, and this show is sponsored and brought to you by Lendio North Florida, by the 161 Group, Bamboo Strategic Media, and Rutex. So getting back to the questions from our audience, Dr. Morris, can you provide tips for pivoting as an entrepreneur and survival in the current environment?
Yeah. Well, the word pivoting has never been one of my favorite ones because it makes it sound like, well, you go down this path until as far as you can, and then you realize that it ain't working, and so you radically pivot and go down this path. I think if we use a different word than pivoting, which is adaptation. Adaptation is a constant state of the entrepreneurial journey. It's a constant. We use a term and when we talk about entrepreneurship called the corridor principle, and I won't get into the whole thing, but the point is, starting an entrepreneurial journey. Let me give you an example. because I do a lot of work now with poverty, people in poverty, and I saw there was a question about poverty. But let's say you take a person, a lady, and she starts a cleaning business, right? That's a tough business. It's intensely competitive. It's very price competitive, and you never want to have to try to compete on a price basis. The entry barriers are low, and you have little bargaining power. Everything's against you, right? She starts cleaning. Why? Because that's what her opportunity horizon consists of. I've seen cleaning. I know people need their houses cleaning, so I'm going to start cleaning. But because she starts cleaning, she enters the arena. She tries. She starts something. She starts to see, well, maybe I could make a little more money if I cleaned offices instead of houses. So she starts cleaning offices, right? And as she's cleaning offices, she discovers that some of them are medical offices. And when she cleans medical offices, she starts to discover, well, they have blood and urine bio waste that has to be cleaned up. And if I get a certification, I can clean up bio waste and charge 5 times what I'm charging for my normal cleaning. Well, that's a journey. It's a journey of opportunities discovery. The opportunities appear because she was on the journey. If she hadn't started the business in the first place, she never would have ultimately seen where the real opportunity is, where real money can be made. And to me, that's the key to approaching entrepreneurship, that it's a constant pivot. It's a constant adaptation. You don't have most of the answers. You have to try things. Many of them won't work out. How quickly do you learn, make the adjustments, make the adaptation, get to something that'll work?
Yeah. So Dr. Morris, we've actually got a couple of your previous students in the comments saying hello. So getting to our next question, this is going to be our last question for the evening before we wrap up the show. So how do you think we can improve the poverty rate?
Well, approaches to poverty is a complex thing. It's not just a lack of money. It's often single parent households. It's often health problems. It's lack of transportation. It's literacy issues. There's this whole mix of things and entrepreneurship is not the be all end all solution to poverty, but it is a solution that we don't spend near enough time on. In fact, if you remember where we started the conversation, Pablo, I was talking about survival, lifestyle, managed growth, and aggressive growth ventures. There are people out there that argue we should not support any of those ventures except for the aggressive growth ventures, except for the next Facebook. Well, the reality is those others make a huge contribution to the economy, to communities, to the tax base, and so forth. But the poor start a lot of those kinds of ventures. And the normal models we use, the way we fund things, the way we largely don't serve them. And so to me, adapting what we call entrepreneurial ecosystems to not just look for the next Uber, but to provide the kind of support and reinforcement and role modeling and training and other kinds of help, which is what we're doing at Notre Dame. We started an initiative working with cities around the country to help low-income people start businesses. But to me, this is incredibly empowering. It's about me creating my own future, my own job. But the other thing that happens when you get more businesses started by people in poverty is there are these community effects. So crime comes down. Kids stay in school longer. Other kind of social problems start to lessen. And so to me, we have to introduce this to the toolkit and not just think about jobs training or, food programs or the other critical things in the poverty space, but how about letting the poor create their own futures?
And there you have it. Entrepreneurship is one of the solutions to poverty. Thank you so much, Dr. Morris, for being here with us and taking time out of your busy schedule to be on our show. We really appreciate you, and thank you to our listeners for tuning in. So we really appreciate all of you who have stayed with us this long. We've got a very exciting guest next week, so we hope to see you back then. Her name is Lori Senecal, and she was rated one of the top 100 most creative people in 2017 by Fast Company. So you're not going to want to miss that. And last thing, one last thank you to our sponsors. Thank you, Bamboo Strategic Media, Lendio North Florida, and Routex for making this possible. We really appreciate our listeners, and we hope to see you next week. Thank you for tuning in.
How about letting the poor create their own